Hey everyone, welcome to the KE Report in a daily editorial kicking off today, Friday, August 15th, with Dana Lyons. Dana is a fund manager and editor of the Lyons Share Pro website. Dana, these markets continue to, I guess we can say, melt higher. Doesn't really matter if we get some bad inflation data or really anything that now comes out of the White House. Markets tend to shrug this off, even geopolitics. They continue to shrug off, and markets have been really moving higher this whole month after a very quick and shallow correction to end July, which July was also the same story, just a general melt up in the markets. Dana, anything within your models that shows we could be coming somewhere close to some sort of a top for these markets?
Yeah, there are a couple things that we've been talking about, a couple factors over the last several weeks or several, I guess, interviews. The main concerns for us right now center around sentiment, which has gotten, for the most part, a little bit overheated after, basically record bearishness and washout levels and hedging activity at those April lows. Kind of flip-flopped, and now we're seeing, pretty extreme bullishness, especially among the quote unquote dumb money investors and dumb money surveys and those types of metrics. So that's a concern. Doesn't It's not really a catalyst to turn the market lower. Still, price will be the best guide there, but it's more or less a signal of the amount of risk, I guess, out there. If we do see a hiccup, how much could come off the table? We'd have to reset that sentiment a little bit in order to get that next probably up leg, enough fuel for that next sustainable up leg. And then the other thing is just seasonality. We see July into August has been the most common spot, or at least one of the most common spots throughout the year historically, for at least a short-term top. And obviously that's immediately followed by the tough August to October stretch. So that's no surprise. So we do often see, as historically, at least some chop. Doesn't have to be an October crash or anything like that, but we also often see some difficult trading over those couple months. So those are our main concerns. But overall, our models are still positive. They've been so since late April, early May, and they've shown some signs of kind of evening out, but still no signs of reversing down. So by and large, we're still positive.
Yeah, it's been a strong upward momentum and a lot of positive momentum in really multiple sectors. But to the point you made about breadth narrowing a little bit, it is starting to get more concentrated again into some of the big mega cap tech names. So curious if you've looked at any divergences between the equal weighted indexes versus the weighted indexes, or anything else you want to add as far as the breadth, because it is not really in the small caps, it's really kind of concentrated into the big guys.
Yeah, definitely the big caps, the mega caps have led the way, at least since that initial rush off of the lows. We've seen kind of the broader market and the equal weight, like you mentioned, kind of level off over the last, oh, really the last month or so. So we did see that's when we saw some wavering in some of the breadth statistics and components that feed into our model. We also saw, basically, while the large cap averages were moving to new highs in the rally into July, surpassed their highs from earlier in the spring or late winter. We saw most of the broad averages hitting lower highs, so they had a nice rally off the April lows. But you still saw, like, the small cap, like Russell 2000, the mid cap average, some of the value line averages hitting lower highs versus those former highs from late winter. So that kind of a divergence really certainly was a red flag. But you also saw a couple broad averages, the value line arithmetic, which tracks the average stock, and as well as the equal weight S&P, had rallied in July back to test those highs from last winter. So at least we saw approximate highs, as opposed to lower highs there. And the other really positive factor in terms of the broad market index would be the NYSE advanced decline line, which did hit at a new all-time high in July before tailing off over the last couple of weeks, but just in the last few days, we saw really a resurgence in breadth. We saw a resurgence in the small caps, especially hitting new rally highs. And we saw the advanced decline line move to a new all-time high again. So those are all certainly positive, constructive developments in terms of breadth and the foundation behind this rally. So those are good signs, even if the equal weight average and many of the broad averages have not quite broken out to all-time highs. They are at least knocking on the door now.
So, Dana, is this simply just a bull market here that investors need to embrace and not fight because momentum's on their side? And quite frankly, all the negative news just doesn't seem to knock it off this course.
Yeah, certainly when you see markets take bad news in stride and continue to rally or buy the dips, that's, a sign of a bull market. It's a sign that despite some of the overheated bullish sentiment that I was talking about, there's still obviously some money on the sideline waiting to come in and buy whatever shallow pullback we get. I do think some of those sentiment readings, like I mentioned in the short term, are overheated. So I could foresee some at least chopping around for even a couple months here before that next sustainable up move. But there's no signs of, lower lows anywhere in the near future. And certainly we've seen minor pullbacks at best along the way. And I think we'll probably gear up for, like I mentioned, another leg higher to that bull market once we chop around and maybe consolidate and refuel for a little bit. I do see higher highs. I think we've seen that move off of the April lows. A lot of that was certainly short covering because into that flush, we saw a near record level hedging activity and selling activity. So a lot of that money had to come back and fuel that first wave of that up move. Now that we've broken into new highs and many of the large cap averages, at least, and knocking on the door, and in even some of the broader averages, like I mentioned, after we do consolidate a little bit, I think we do break out and put in a new up leg. So like you mentioned, long story short, we are still in a bull market, and it's best to treat it as such.
Well, Dana, with that point you just made that we're in a bull market treated as such, would you be pressing on the gas here and adding to positions then if you expect higher levels, or are you just more in a hold? How are you managing your portfolio, and at what point do you start any hedges? Like what would you be looking for when you finally started to hedge?
We did put some hedges on a couple weeks ago when we saw kind of some divergences in the late July rally. A few of our components within our main risk model, did turn lower. It wasn't unanimous, so we never got a full-on sell signal. But we did trim some positions as they hit key Fibonacci extension levels, and we did actually put a few small hedges on in some areas hitting lower highs. Russell 2000, the semiconductor index, biotech index, some areas like that were lagging. Did get a short-term pullback from those initial resistance levels. Covered some into those areas, but just in the last couple of days, now that we're making new highs in several of those indices, we've blown out those hedges. So no real, unless we see a compelling setup, we're not looking to put on many hedges, but we have trimmed back some of our longs. We're not looking to increase our longs necessarily here, but if we get some chop, we'll be looking to trade around, tweak our positions a little bit, selling it into rallies a little bit, buying back into a pullback, but not looking to press the pedal down at this point, given where sentiment readings are, given where seasonality is. But we'll look for opportunities, within the chop in good relative strength names. If they do see pullbacks into some support areas, we'll be looking to add certainly add some exposure into those.
All right, Dan, let's talk precious metals. We like to focus on commodities, and gold has been really doing nothing for the last 4 months. But the precious metal stocks, you look at something like GDX, had a breakout earlier this month, has moved up very aggressively to start this month. And that, again, is in the face of a flat gold price. So we're seeing the stocks outperform. Seeing anything on the GLD chart or on that GDX chart?
I've seen a lot of positive activity, certainly, and we've been talking about these for a while. The action in the miners as well as the metals themselves. I can't find much to fault either the metals or the miners. Obviously, the metals kind of made their move first, and we're part of that. But certainly, we've been along for the ride, like we've discussed really most of the year in the miners and breaking out to new either multi-year highs or even decade highs in some of the ETFs that we track. Certainly, there's there's nothing wrong with that. And in fact, that's probably the bullish thing we can see. I mean, it's not that I would be chasing necessarily any of these big breakouts. We're pretty well positioned for this, as we've discussed, but breaking out above resistance levels that we've seen for several years or a decade is there's certainly nothing bearish about that. We're just going to probably hold our positions if we do get pullbacks towards support levels like we did, maybe in July as we consolidate a little bit, got an opportunity to add a little bit of further exposure there, especially in the silver and junior silver miners we added. And then in the copper freakout day, I think, like we talked about a couple of weeks ago, we're able to add some into the copper miners, copper junior miners, some exposure there, and has gotten a nice reaction off of those lows. But at this point, just riding the wave, riding the uptrend, and certainly the breakouts to new, multi-year or decade highs. We're certainly going to sit with our positions and let those run even further.
Well, Dana, just to follow up on those, if you look at the ETFs for the stocks, for the gold stocks or silver stocks, whether it's GDX or SIL, it looks like a lot of them are pulling back to their 50-day moving average and then finding support there and then rallying again and pulling back multiple times. So when I'm looking at a couple of these ETFs, they're acting like you would expect a stock would in a bull market to keep pulling back to that first level of support. Do you put any weight on that? Things like moving averages, or what kind of support levels do you look for when you're doing technicals on these ETFs?
Yeah, when we're trying to, it's not, it's more the technicals and the charting is what we rely on really to pinpoint, entry and exit points. So we've got models that will kind of guide our investment selection process and tell us, basically what we want to be in. But like you mentioned, we'll go to the charts and the technicals when we want to kind of fine tune entry and exit points. And like you mentioned, yeah, we will look at moving averages. We'll look at Fibonacci levels when we're looking for support resistance levels and good places to add exposure or even trim some exposure at some key extension levels. So like you mentioned, it's been a very kind of deliberate and orderly move higher as opposed to what we've seen in a lot of the spurts higher over the last several years or even decade. We've seen a lot of spikes higher and then immediately lose those gains. They've been short-lived. This time we're seeing pretty orderly movement. We'll see moves higher, higher highs, higher lows, a consolidation, not a lot of give back, and then breakouts to new highs again. And that's kind of what you want to see in more of a what I call probably a sustainable type of a move higher, and really an earmark of a legitimate bull market. I think you have those orderly moves, like I said, and then really limited retracement. That really, if you're looking for major retracements to add exposure, especially people who have been left out of the move, you're not getting that, and that's really the sign of a good, strong bull market.
Yeah, it's a bull market. There's a few bull markets out there that just keep on running. What about Bitcoin too? Because that recently broke out to all-time highs yesterday on Thursday. Had a bit of a reversal. Is it too early to call a top on this recent Bitcoin move though?
Yeah, I don't see any reason to call a top necessarily. We're long Bitcoin. That's also acted very orderly, along the lines of gold, the gold moves. You haven't seen huge retracements like we've seen, along the way during the bear markets in Bitcoin. We've seen really resilient action in that. We've seen rallies like breakouts and, like I mentioned, rallies and breakouts to new highs. We've seen good, strong consolidation, very little, relatively little give back to those breakouts, to those rallies, and we've seen the good support levels hold. So I would lump really Bitcoin at this point in with some of the precious metals, especially gold, how resilient it's been and how little give back it's had thus far. So we're treating it the same. We've had a position in Bitcoin for a while. We'll continue to have a position. We'll continue to look for opportunities to add on pullbacks there and not looking for. We don't see any signs of a top right now. That could change, obviously. Depends on the price action. But at this point, it's been a nice orderly climb, and we'll continue to ride with it as long as the chart says to enjoy the ride. The trend is your friend, as they say.
Indeed, it is. Well, we've talked about U.S. markets domestically. We've talked about commodities. We talked about cryptos. What about international markets? Any particular sectors there that have your attention?
We've seen, again, very orderly behavior in a lot of the international markets, some of the individual European markets, some of our positions, Italy, the UK have broken out, have held those breakouts nicely, consolidated, and then moved higher. Really, you've got a lot of examples around the globe. Peru is another one that has had a nice orderly climb higher. You get periods of consolidation, then another breakout and consolidation, but very little give back. So that looks strong. Another market that we've seen recently break out has been Japan again. Japan had a tremendous move up until about a year ago. When the Nikkei rallied up to test those highs from back in, I guess, 1990. So made it all the way back there. Finally, it took it obviously 34 years or so to get back to those former highs, but finally did. It's been consolidating for a year, which is not surprising. I wouldn't be surprised to see it consolidate, another year or so before embarking on a breakout into sustainable trend. But looking at the ETFs, we're seeing EWJ solid breakout to all-time highs. We'll look for that to hold. I've got a position there. And then another index that I like in Japan is the small caps in Japan have broken out to all-time highs, and we looking for a retracement in here to add a position in something like SCJ, which tracks the Japanese small caps. Also looks good. So we especially like that market in the long term after going through that long-term bear market like it did. I think there's a lot of fuel there for much higher highs in the years to come.
All right. Dana, thanks for the update here. A lot of bull markets, a lot of the trend being your friend, and keep riding that trend. It sounds like we'll keep following up with you on every 2 week basis just to see if anything changes. But right now, still very much a lot of opportunities. Hopefully, everyone is taking advantage of those opportunities. Everyone, if you want to follow along with what Dana's trading, what his models are telling him, click that link in the show notes to visit the Lyons Share Pro website. Dana, thank you as always for your time today.
Appreciate it. Always a pleasure chatting with you guys. Take care.